Hey warriors, I hope you're all doing good. I know last week your May 2024 exams have concluded, and I'm extremely proud of everyone who has gone through these exams and have done a really good job in your exams. I am taking this time to now go through the review of the paper which got released for the May 2024 taxation. I know I'm a little late because exams got over quite 2 weeks back, but I purposely wanted to wait for the full exams to get over, both the groups included, so that people do not waste time looking into this video and spoiling their time which they should have spent for their other exams. And therefore, I'm launching this video now after everything is concluded. Two things which I want to, before I start the paper itself, tell you. One is that I spoke to so many people who wrote this exam, and I was extremely happy to hear that paper was extremely easy for all of you. Now, yes, there might be some tricks here and there in the paper, but otherwise, if you feel the paper is easy, that clearly shows the kind of efforts you have put in for this exams, and therefore, I am extremely proud of everyone who feels that the exam paper was easy. Yes, this time paper was prepared a bit moderate. They did not really test into too many extraordinary out of syllabus kind of questions. Few things here and there on the trick level, which is what we are going to discuss in today's paper. But otherwise, paper was fairly straightforward and simple. Second, for all of my friends who have written this May 2024 exams, if you are going to watch this video with an impression that you want to review your exams and see how well you have done, please stop the video right now and exit from here. This video is purely educational and purely for my friends of the September 24 and the Jan 25 students who are planning to use this paper as a revision module in order to practice for your exams. That is the only intention with which why the solutions are being given at this stage. The limited purpose for which a student should watch it if you have attempted this May 2024 exams is only to understand if yes, you may have thought something like this, but you may have done something very differently, because of which you are now expecting probably you have not done a great job. Only in that scenarios is what I would be expecting you to look at this paper, but otherwise sitting along with me reviewing what you have done in the May 2024, answering yourself and trying to score out how much you will get so that you pass or you fail is not the intention of this video. If you are with that intention, I'm sorry, please exit from here. This is not for you. Yes, open this video with a fresh mind, a happy mindset, and that is what the only intention which I would like to do. Honestly speaking, yes, May 24 students, I would not even ask you to look into this video. Personally, that is not for you. This is only for me to come and discuss how the paper was looking like and understand how the pattern of ICA has become in the new syllabus, so that my future students can have more benefits out of it. That is the only intention with which why we are doing, which is why in this paper we are not going to be solving the whole paper. I will not be giving you numbers anywhere. I will not be giving you final things. I will only be discussing the paper so that all of my friends who are going to use this paper as a reference for your tests, you will go through this and then you will automatically come and correlate it with what you have done versus what is showing here. That is the only reason by which we are going to discuss this paper, and therefore no answers will be given in this. If you do look for numbers and you're expecting some numbers out of it, please wait for the suggested answers to come in, because I've noticed this in the past also, that when we give suggestions as a faculty, sometimes ICI plays around differently in the suggested answers, and therefore suggested answers may have a different opinion. So I do not want to take that chances. Let me not give you any answers on that opinion front. That is the only intention with which I am discussing this paper. Sounds good? Perfect. Great. Further happy news for all of my students who are planning to use this as a test paper. I also have in my possession right now the MCQ booklet which was launched by May 2024. Now I know as per ICI practice, technically you're not supposed to have the MCQ booklets being rolled out, but for some reason, same as last attempt, this time also the MCQ booklet got leaked out, and therefore I do have it available with me from an open source, and therefore I'm going to review that as well. Now, there has no been any kind of involvement of me in this obtaining of answer paper. I got it from an open source. The links also are showing in the header and footer for you. So that is the only place I got it from. I do not know if it is authentic or not, but judging by how I've reviewed it along with my students, it looks like the paper is authentic. For all of my friends who have written MCQs, I do know that there are some set A, set B, set C and everything. So one or two questions here and there may be very different, but otherwise if you actually standardly notice, case scenarios and everything would be fairly the same only. They would have not changed too much around it. So still a decent paper for us to review. A complete paper is what is there in my possession. So I'll be discussing everything for you in the direct tax part of this paper. if you are looking for reviewing of indirect taxes, I will have this paper put into the description box of this video. You can take this paper, share it with your GST faculty, and then discuss it along with them also if you feel so it makes sense. I will only be discussing the direct tax part because that is what my expertise lies into. Sounds good? Perfect. With this, we are going to start reviewing the whole paper. Please do excuse me for my video quality today. I am not into my usual studio model, and therefore this is what will the model look like. Do not worry about those things. You are more focused on the main video which is showing on the screen with the question. So that is the only thing which you need to look into. Focus on that, and therefore we'll do it. Yes, sweet. I'm going to look into the questions quickly. I am going through the MCQs. I think the first case scenario number 1 is completely a GST MCQ, so I don't have to take so much efforts on this. Please discuss it with your GST faculty. That will make more sense. Coming to your case scenario number 2, which is relating to direct taxes. Now, I'm going to review it same as how I would have done it in an exam paper. So therefore, that is what my intention would be. I am not looking into the case scenario at all. That is not the way to do a paper at all. I am directly shifting out from your case scenario and moving into my questions. Let's first figure out what the question says so that we can then look into our case scenarios and see what the answer would look like. Yes, I'm looking at the case scenarios. It says, what would be the amount of capital gains which is chargeable to tax in the hands of Aryan? So there is a person called Mr. Aryan. Aryan's capital gains is being requested. We'll discuss about it. Next, choose the correct answer from the following. Share of profit is exempt and interest of 36,000 is to be included in the hands of Anjali and interest of 60,000 in the hands of Aryan. Some partners level question, so we'll discuss on that. Entire income of 96,000 and share of profit is taxable in the hands of Anjali. See, I don't even have to go into the case study right now. If I'm noticing the question says share of profit is taxable in the hands of Anjali, which itself is wrong. You can never have a share of profit from a firm being taxable in the hands of partners, so B is never an option itself. Share of profit of 40,000 is included in the hands of Aryan. This is also wrong. Share of profit is fully exempt, but interest of 12,000. So either A or D. That is what we'll have to discuss. We'll look into the question so that we have the answer properly. Next, the eligible deduction under 80D for Aryan is being requested. So you have to look at the eligible deductions. Okay, so 3 questions for you. Two is of Aryan in fact, and one is of Anjali with Aryan. So let's look at the case scenarios now. Let's see what we can make sense of the case scenarios. It says, Mr. Aryan is resident 40 years, entered into an agreement with Mr. Ashish on 1st May 2023 for the sale of his house in Mumbai and has received an advance of 1,50,000 by cash. Okay, so on 1 May 2023, there is a person called Aryan who's entered into an agreement with Ashish and has received 1,50,000 as cash. Now, the problem is when you receive a cash payment on a transfer, the stamp duty value on such date is ignored. You can only take that stamp duty value which is taken on the date of actual advance payment by permissible modes. So, I'm ignoring this. It was sold on 1st August 2023 for a consideration of 90 lakhs. So, this becomes your actual consideration, which is purchased on 1st December 2018 for 50 lakhs. So there is a person who's made a purchase in 2018 and has sold it on August 2023. I'm noticing the number of years, it's almost about 5 years, which means the gains which is resulting out of this is a long-term capital gains. Okay. The stamp duty value on 1st May 2023 and 1st August 23 are given as 92 lakhs and 1 crore 1 lakhs. Like I told you, on the 1st May, the 92 lakhs will not be relevant for me because the payment has happened by a non-permissible modes. So my actual stamp duty value which I have to consider is 1 crore 1 lakh. My actual consideration is given as 90 lakhs. Comparing both, whichever is higher is 1 crore 1 lakh. Unfortunately, it is not within the 110% of bracket. So therefore, my full value of consideration will become 1.01 crores. Yes, I also have been given my cost of acquisition. Since it's a long-term capital gain, I'll have to do an index cost of acquisition. I have no facts given to me right now, just the fact that it is 50 lakhs. So I'm going to take 50 lakhs. I know the current year indexation, which is 348. I will have to know the indexation of 2018. Let me look at the indexation numbers. Yeah, it's given here. So it's number 280. So I will do 50 lakhs divided by 280. Into 348. This will become my full value of consideration minus index cost of acquisition. This will arrive at my long-term capital gains. Yes, whatever number it is, you can calculate and you can find it out yourself. Next, he has invested 20 lakhs in capital gains account savings scheme before the due date of filing of return of income. Noticing the question, the person is selling a house. The moment the person is selling a house, he is eligible for certain exemptions. You can either claim 54 or you can claim 54 EC. Now, because the person is investing it in CGA scheme, the assumption is that the person wants to claim an 54 exemption. 54 exemption requires you to invest your capital gains amount. I don't know what my capital gains is, but I'm assuming it is more than 20 lakhs only. And therefore, whatever capital gains I get from that, I can also reduce an additional 20 lakh rupees in order to arrive at my taxable capital gains. Yes, this is what the answer would be to my first question. So in this first question, what you'll have to do is you'll have to find out your capital gains and then reduce 20 lakhs out of it. You should get your answer. I don't exactly know the numbers, but I'm assuming it is either A or C. D does not look like right answer. It is either A or C. You can figure it out yourself. Yes, great. Going on forward, it says Mr. Aryan is carrying on a partnership firm with his wife Anjali. The contribution of the partnership firm is given as 8 lakh rupees, out of which 5 lakh rupees was invested out of a gift which is received from Aryan. So Aryan has helped Anjali start her partnership business. In that, she has contributed 3 lakhs and Aryan has contributed 5 lakhs. She further invests 2 lakhs on 5th April 2023, which is also gifted by her husband. So an initial contribution is of 5 and 3, and then later on there has been a 2 lakhs worth of contribution as well. I do not think that it matters because at the end of the day it is not relevant. At the end of the day it is not relevant. It does not matter because the initial contribution can only be taken. Only contributions which are there as a part of the opening capital is something which is relevant. Any other contributions are not very relevant, and therefore you can ignore it off as it is. Yes. Next, the firm has paid interest of 96,000, which was fully allowed as a deduction, and a share of profit of 75,000 to her in partnership ratio. So therefore, I am looking at this. The firm has paid 96,000, which is fully allowed as deduction, a share of profit of 75. I think we have already discussed on the share of profit part. Share of profit is fully exempt from tax. You don't have to worry about it anymore. You just have to look at the interest component. Looking at the interest component says it is 96,000. What will you do? You'll take this 96,000 and you'll split it in the ratio of 5:3, which is the contribution ratio in the opening capital. Out of that, 5 lakh rupees will go in the hands of Aryan and 3 lakh rupees will go in the hands of Anjali, meaning 96,000 into 5/8 and 96,000 into 3/8. This is what the ratio would be to split it off in the respective partners ratio. This is what you will have to do so you can get the numbers from that. Yeah, great. Let's move forward. He has paid a medical insurance premium of 20,000 by NEFT and a 5,000 by cash for himself, his wife and his child. Now, the person has paid some medical insurance premiums. The first medical insurance premium he's paying is of 20,000 by NEFT, and 20,000 by NEFT is allowed as a deduction. So that's no problem. So 20,000 by NEFT is going to be allowed as a deduction. I have no restrictions on that. The 5,000 which is paid by cash is not going to be allowed as deduction because it is in a medical insurance. In a medical insurance policy, you only have to pay by permissible modes, meaning other than by cash. Since it is not paid by permissible modes, it is not allowed as a deduction. So 20,000 is what I'm going to allow as a deduction. He has also incurred 5,000 towards medical checkup for himself, his wife by cash, which is also allowed as a deduction. So 20,000 will be allowed as deduction. Plus 5,000 will be allowed as deduction. Please do understand the fact when it comes to health checkup can be made by cash payment. So therefore there is no restriction. He has paid 43,000 towards medical insurance premium of his father, who's 68 years, through net banking. So he has paid 43,000 for medical insurance of father through net bankings, and therefore it is allowed as a deduction. All conditions are being satisfied because the father is a senior citizen. Next, he has incurred medical expenses of 8,000 of his mother, age 62 years, who is not covered by Mediclaim policy through credit card. Again, credit card payment has been used, so therefore this is also allowed as a deduction. You don't have a restriction here. The problem is the payment is coming as 8,000. Now, if you add 43 plus 8, it becomes 51,000. Unfortunately, because this person is unfortunately, because the payment is for a senior citizen, the maximum deduction which you can get is 50,000. So therefore, I'm only going to include an additional 7,000 for me to claim the deductions. Yes, so this is what would happen. So I will have 25,000 plus 50,000, which is totally 75,000. So that is the only answer which you can claim. You cannot claim anything more than that. Yes, this is what the answer would be. I'm assuming at this stage Aryan is not a senior citizen. Yes, it says Aryan is age 40 years. So therefore there is no problems here. Yeah, simple straightforward MCQs. Very easy. You don't have to worry about it anymore. You just had to do the calculation on the capital gains part. You'll get the answer very straightforward. In this B and C, I've already excluded. If you ask me honestly, I think the answer should be A. 5:3 ka ratio, 36 and 60 makes more sense rather than 12 and 84. So therefore option will be A. We have already discussed 8 ka. So option number B. Fairly simple, straightforward question. So you don't have to worry so much about it. Yep. Sweet. Next. Case scenario number 3. Yeah. Looks like a direct tax case. So let's discuss about it. I am again going to the question so understand what the question says. You're required to calculate the presumptive income under section 44AE of Govind for the assessment year 24-25. Now, if you don't know the section numbers, it does not matter. As you read the MCQ, you will understand what the question relates to. So do not worry about the section number. But one thing which is very clear is that they want the presumptive income. So let's work with the presumptive incomes. Next, the maximum remuneration which is allowed under assessment year 24-25 for Govind and Co is what the question asks. So you have to give a maximum remuneration allowable for Govind and Co, which means Govind and Co is a partnership firm which is going to give remuneration to its partners. Now, the one thing which I want you people to do keep in mind is that when it comes to presumptive taxation, normally we have always discussed that all PGBP adjustments are assumed to be taken care of. There is only one exception to this rule, which is under 44AE, which is goods transport agency. In a case of a goods transport agency, the provisions come and say that even though presumptive income is being computed, the interest to the partners, the share, the salary to the partners can still be allowed as a deduction. So in all presumptive taxation, there is only one deduction which can be claimed, which is interest and salary paid to partners only under a goods transport agency. So if you have hurried and you have written option number B as the answer, that is definitely not the answer. That is definitely not the answer. It is either A, C or D. It is either A, C or D. We'll discuss about it. Yeah, next, the agriculture income of Mr. Senu for assessment day 24-25 has been requested for you. So which means there is some agriculture income question. Great. So with this, we'll read the question once again. Let's see what the answers are. It says Govind and Co is a partnership firm consisting of two partners. One is Govind, one is Sinu. So there is two people. One is Govind, one is Sinu. The firm has operated with 2 light good vehicles which are used for 9 months and 13 days during the financial year 23-24. Very good. So even though you don't know the section numbers, the one thing which is very clear is that the question is asking for transport models. When the question is asking for transport models, you have to only remember the provisions. Let's do the provisions quickly. It says light good vehicles. I have a light good vehicles of 2. So I have 2 light good vehicles. I have used it for 9 months and 13 days. Please do understand, when it comes to presumptive taxation, there is no provisions relating to light goods used for 10 days, 15 days and all. It is directly simple, straightforward, that if you have used it for 1 day in a month, that month is fully to be considered. So I'm going to take the full month, which means it is going to be 2 into 10 months into 7,500 per month. Yes, this would be my first computation for me to go forward. Great. Next, it also has 4 heavy good vehicles, 15 ton each, out of which one is operated for 6 months and 20 days and the balance 3 are operated for 12 months. So now you have 2 heavy good vehicles. So heavy good vehicles I'm going to split into 2. One is going to be 1 into how many years? It's been operated for 6 months and 20 days, which means it is operated for 7 months. The heavy good vehicles has been confirmed to be of 15 tons, which means you will just take 1000 per ton, which is 15,000 rupees. Yeah. Great. Next, you have the balance vehicles. How much is the balance vehicles? The balance are 3 vehicles which are being operated for the whole 12 months and is going to be for 15,000 rupees again. Yeah. Great. Next, you have another purchase of 3 light good vehicles which are being used. Just give me one sec. Yeah. So it is 3 into 12 months into 15,000 rupees. Next, the firm has purchased 3 light good vehicles on 20th July 2023 and put them to use on the same day. So you have had a purchase of 3 light good vehicles more on 20th July 2023. So again, another 3 light good vehicles will get included. You will take it for July, August, September, October, November, December, January, February and March. So 3, 6 and 9 months is what you're going to take into consideration. Yeah, so this is what you're going to do for consideration purposes. So it is going to be 3 into 9 months into again heavy good vehicles, but light good vehicles were taken, sorry. So it is 3 into 9 months into 7,500 rupees per month. That is what you will take as a computation model. Just give me one second. I'm sorry, something has got stuck. Yeah. Okay. Yeah. So it is 3 into 9 months into 7,500. That is what you'll do. If you multiply all the 3 numbers and you get the answers, you should get the options in this answer. You can pick the answer with the multiplication model. Yeah. Next, both the partners are working partners and the partnership deed has been given to you for the purpose of salary computation. So the follow-up question which I remember is that the question came and said that you also have been given a salary. So you have to work with the salary also and you have to take the salary deduction. Yeah. Now, please do remember that I told you that whatever is your salary, you can claim it as a deduction when it comes to presumptive taxation, which means this question number 10 is going to be dependent on question number 9. If you have made any mistake in question number 9, the question number 10 is also going to come out wrong, because you will have to use the profit which you're getting from the presumptive taxation in order to get your taxation of salaries. Yeah, so I am assuming the answer in this question was option number D. I don't know, I don't remember it exactly, but I remember it is option number D or option number A. Some computation will come. If you multiply, you'll get the number. That 9,97,500 or 9,67,500, as the case may be, you have to take that and you have to do a book profit computation. For the first 3 lakhs, it will be 2,70,000. For the balance number, it will be 60%. Keeping that number in mind is what you'll get the maximum salary which you can pay under option number question number 10. Yeah, this is what you have to do. So a fairly simple straightforward question. Just be careful in the mind that if you have done question number 9 wrongly, you'll get question number 10 also wrong enough. Great. Next, Mr. Sinu has a tea estate in Coorg. He grows tea and sells them. He earns an income of 20 lakhs from the above activity during the previous year 23-24. A simple straightforward one single line which comes and says what will you do with the tea incomes. Now there are some faculties in the market who are actually coming and telling that Rahul, when it comes to tea will be taken as option number B, which says entire income of 20 lakhs will be treated as agriculture income. Now, if you have also done the same kind of mistake, I'm sorry, the answer is wrong. Please do bear in mind that the question comes and says that the person is growing tea and selling them. Yes, please do keep in mind that just because you see a word called growing tea and selling them, it does not mean that the person is not doing any business operations. Do keep in mind as simple English term that when you're talking about tea, what you grow is not tea. What you grow is tea leaves. Yes, what you sell is tea. Yes, there is a subtle amount of difference which makes the huge impact. Yes, just because you're coming and saying a wrong English in the question does not change the facts of the scenario. I know this is a mistake from ICI which comes and says that they are coming and saying it is growing tea and selling them. It looks like it is completely agricultural operations, but in all practical purposes, tea cannot be grown and sold just like that. It is only tea leaves which can be grown and sold. Since the word is saying tea is sold, it means that there is a tea leaves which is grown and then it is sold, which means the composite income will come into picture. The answer would be on a composite level. So option number B is definitely wrong. You cannot take option number B as the right answer. Yes. So option number A is definitely wrong because it says entire income is business, which is not the case. You cannot have entire income as business. Option number B is also wrong because it is not taking into consideration the composite nature. You have option number C, you have option number D. It says agriculture income is 12 and business income is 8. Agriculture income is 15 and business income is 5. Now, I am looking at the 20 lakhs, right? So 20 lakhs ka ratio is 40:60, which means the answer is option number C. C is what the right answer would be. You have to take the C as the right answer. Yeah, this is what the computational model will look like. Are you clear? Yes, sweet. So if I have to now take a pause and I have to ask you, Rahul, how was the case studies? If you tell me, Rahul, case studies is fairly simple. Yes, ideally speaking, if you ask me, when someone tells me case study looks like a story. Yes, you give someone a big storyline and then you ask them how the case study looks like. That is what a case study would be according to me. But if you notice these two case studies, there was nothing relating like case study per se. It was all looking like, standalone questions given to you, just merged it together and given into a case study question kind of scenario. Fairly simple, straightforward thing. The one thing which I feel ICI has not done so well is that simple questions like these where it's a 40-60 ratio and all, they're asking for 2 marks. Yes, it's a giveaway kind of scenario is what I would tell you. Honestly speaking, if you have done your MCQs itself properly this time, great enough, you can get huge marks. Yes, this time's MCQ has looked like a very boon scenario for you. You cannot be going wrong anywhere in this. That is what my whole impression would be, honestly, if you ask me. So I do not see how a person can go wrong in your MCQs. Fairly simple, straightforward MCQs is what has come for your exams is what I'm noticing. Yeah. Okay. Okay. When you really want to do something well, no, the system will also not support you so much. Anyway, I'm looking at question number 12 now. Now from here starts your standalone question. So let's focus on your standalone questions and see what the answer is. Which item of the following is not subject to the provisions of section 43B of the Income Tax Act is what is the question. Now, here is where the problem comes. Normally, ICI comes and tells you that yes, you should not be remembering section numbers and all because it's not relevant for exam. But then suddenly they'll give you a googly here where they'll ask you for section numbers and all. Here is where things go wrong. Yes. Now at this stage, if you start getting frightened in exam and you start looking at it, oh no, I don't remember section numbers. What exactly is this? Here is where the whole mistake starts. Here is where the golden rules of taxation come into mind, and therefore you have to be very smart and very careful about how you kind of answer these questions. Anyway, there is no negative marking, so you can always take a swing, but if you think about it for a second, you'll actually get the right answer. Yes. Notice this one thing very carefully. It says which of the following expenses is not subject to the provisions of 43B. Now, when they speak about the word expenses itself, one thing is very clear, they're into PGBP section. Yes. Now comes your memory charge where you come and ask, okay, expenses not allowed as deduction. Yes. Now in that, what we're going to do is we're going to simply look at the 4 items and try to find an odd one out. That is what our whole impression would be. If you can do that much, you will automatically get your answer. You don't even need to know the section numbers. Yes. Let's look at the odd one outs. The options are given to you as follows. It is interest on term loan from public financial institutions, interest on loan given to banks, okay, goods and services tax, payment of taxes, okay, interest on in advance a loan taken from banks, again interest on loan from banks, and finally salary to employees. Now if I take a second and if I go through all the expenses which I notice in the PGBP section, the all expenses in the PGBP section had some places where you would talk about an expense, and items, if I notice on these, are some expenses which I have told you in the classes also that these look like important critical expenses which you should pay before the due date of return filing in order to claim the deduction. Yes, which means we are technically into that section which comes and talks about certain expenses being paid before the due date of return filing. If you have got till that stage, your answer is already through, because if you notice 4 items length, we discussed about the facts like any payment of taxes, any kind of interest on loan taken from a bank or NBFCs, any kind of salary, any kind of bonus, commission, leave encashment given to any kind of employees, any kind of employer contribution given to funds, use of railway assets, and the current year amendment which is payment to MSMEs. There was no mention of salary to employees anywhere, which means salary to employees is the odd one out here, and this is what the answer would be. Yes, this is all that you had to do in your thing. Even if you did not do this, and you somehow did not know it, you just had to go through the 4 items. You will realize that when we discussed about the whole PGBP chapter, nowhere in the chapters anywhere have we discussed about salary to employees. Nowhere. Yes, we have never been discussed anything about salary to employees. We have only discussed something called salary to brothers and all for unreasonability, but otherwise we have never discussed anything about salary to employees anywhere in the whole PGBP. Every time it has come up in an adjustment also, we have always come and told it's a business related expense and allowed us a reduction, which means the moment you see on the question itself, the question says which of the expenses is not subject to tax and not subject to provisions. Now when it's not subject to provisions, this is the only section which has no provision, so therefore 4 is the right answer. That is how you have to simply answer it, and this is the best way to do it. A very simple straightforward thing which you do not even have to take some efforts on to. You could have easily got the answer, and that is what the answer would have been. Yes, if you have taken so much efforts, great. If you have not taken so much efforts, no worries. 1 mark is not going to be a big deal. Don't fret about it. But yes, if you have sat in the exam and you have wasted on the times thinking about, oh no, what is 43B? Would I know it? I should have read section number 43B. I have not done a proper reading in my life and everything. That is where you lose your marks. You either be smart or you be the fool. That is what the answer is. Don't be in between. Don't keep on sitting and fretting about things. It is not going to help you for your exams. That is the only request which I would have for you. Anyway, we're looking at question number 13. Question number 13 says, Mr. Govind, who is a wholesaler of chemical business, incurs monthly expenditure of 15,000 towards nursing and on maintenance of his handicapped son, Mr. Ajay, who is not 12 years. Ajay is suffering from cerebral palsy. Neurologist attending the patient says that there is no cure and certified the disability is 80%. The expenditures were duly debited to personal drawings account of previous year 23-24. As per the profit and loss account, the net profit is 12 lakh rupees. You are requested to confirm which one is right. Yes, so there is a person who's going to take care of some handicapped person who's having an 80% disability. They're telling that he has paid this money from his personal drawings and has not charged it off to P&L. The net profit is 12 lakh rupees, which does not have this component. That is what the whole question says. Now, which one is the right answer? You need to look at all the 4 options and do an elimination method. Yes, so let's look at an elimination method. First one says Mr. 75,000 can be claimed as deduction from gross total income of Govind only if he opts out of old tax regime. Now, if you're opting out of old tax regime, it means you're going for section 115 BAC. Now, under 115 BAC, if you remember properly, chapter number 6A is not even eligible for deduction. So, option number A is definitely wrong. Cannot claim it. Next, 1,25,000 can be claimed as deduction from the gross total income of Govind only if he opts for the new tax, only if he opts out of the new tax regime. If he's opting out of new tax regime, it means it's going for old tax regime. If he's going for old tax regime, only chapter 6A is going to be eligible, and 1,25,000 looks like a right number. If your disability is 80% or more, yes, 1,25,000 is the right answer. Next, cannot claim any deduction by Mr. Govind since these expenditures are not connected with business either in old tax regime or new tax regime. Nothing like this is there. You don't have to have it in business itself. In fact, first of all, the person is a personal person and therefore you cannot have a business expense. Next, can claim 150% of amount paid by way of additional deduction from income computation under both regimes. I've never heard something like this and all. You don't have a provision called 150% in your income tax syllabus itself, so therefore this is definitely not the answer. Yeah. Sweet. Case scenario number 4 looks GST, so I'm ignoring it. 14 is GST, 15 is GST, and 16 is also GST. Sweet. With this, we are done with your MCQs. Simple, straightforward MCQs. If you ask me, Rahul, in MCQs of direct tax, 2 case study questions came, almost about 2 standalone questions came. If you ask me, Rahul, how much marks is it? I think it should be 15 marks, obviously, but nevertheless, 2, 3, 5, 7, 9, 11, 13 and 15. Yes. Out of this 15, if you ask me, I would honestly come and say a person can easily score 14 marks. The maximum you could have made a mistake is on the 43B wala if you have fret about it. Yes. Otherwise, I don't see any MCQ which you could have gone wrong. Every MCQ looked like straightforward. If you just put in your calculator also, you would have got the right answers. Or if it have elimination also, you would have got the right answer. So I do not see anywhere people could have gone wrong in this MCQ, which means as of now, if you honestly ask me if you have studied well properly and gone for exams, out of 15, 14 was definitely already in your pocket. Yes, now I'm only talking about direct tax. I'm not even talking about indirect taxes. I'm assuming indirect taxes was also similar, same, straightforward, which means by the time you complete your MCQs itself, you fairly were ready to clear the exams. Yeah, but nevertheless, let's look at our questions also to see how much we could have scored in your full-fledged questions. I am looking at my full-fledged questions. It says, Mr. Sahil is a resident Indian, age 40 years, manufacturer at Chennai. So the person is a manufacturer. Gives the following particulars of manufacturing, trading and P&L account for the year ended 31st March 2024. Now I'm looking at a person. The person is 40 years, resident Indian, which means no restrictions otherwise. The tax rates is going to be remaining same as it is. The person is a manufacturer, which means you have to bear in mind about the additional depreciation if at all the question asks you for. Now, my standard practice, I'm not going to look into the table. I'm directly going to look into the requirement of the question first. My requirement of the question is here. It says computation of total income and the tax liability of Mr. Sahil for the assessment year 24-25. So I have to look at his total income also. I have to look at his tax liability also. Assuming that the person is exercising the option of shifting out of default regime. Oh wow. Which means they have not asked you for both the regimes. They have only asked you for shifting out of default regimes. The person is doing old tax regime. The person is doing old tax regime, which means you don't have to worry about 115 BAC. What you know as such is what is going to be coming in as it is. By the way, when I was looking at it, somehow my eyes fell here. Notice this, no, it says ignore additional depreciation under section 32(1)(2)(a), which means the person is not even expecting additional depreciation also. Oh god. So you're basically asking them to do a question under default, under optional tax regime without additional depreciation also, which means now I don't care whether the person is manufacturer or no manufacturer. It does not matter. I'm sorry. It does not matter that the person is manufacturer or no manufacturer, because you don't even have to claim additional depreciation. No one cares. So let it go. Let it go. Yes. With this facts clear in mind, let's look at our questions and let's see which will fall under what head. What adjustments do we need to make? Again, I'm not solving the full-fledged question. I'm only giving you hints on what you should do. If you've done the same format, you should have got the right answer. That is what the whole impression is. I'm looking in those terms. Looking at the right side, we look at sales. Sales is 43,50,000. Now, this is something which I peculiarly think that you should have kept in mind. Somehow most of the faculties are not telling you about this, but I wanted to give it to you. I have already discussed this in the class multiple times, that when you're looking at a transaction like this where you have given the P&L account and they start from sales, always bear in mind that you need to check for something called as presumptive taxation. Always bear in mind the person is a manufacturer and is a individual, which means up to 2 crores of turnover or 3 crores in case of the amendment provisions of the current year, you are mandatory required to check for presumptive taxation and take whichever is lower. Yes, it is a mandatory thing to do even if the question does not ask you for doing it, because as a tax advisor, it is your job and responsibility to do that as well. If you have not done the presumptive taxation, chances are that you may lose 1 or 2 marks there itself. And if ugly scenario comes where your presumptive income is lower than your actual business income, you may lose multiple hefty number of marks, because then your tax liability is also wrong. Yes, but this one thing which I want you to keep in mind is that presumptive taxation is extremely important and supposed to be done. I am assuming all of my students who have gone classes with me in the past have seen this mistake happening multiple times and would have not made this mistake in the exams. If you have not done this mistake in the exam and have checked for presumptive, do give a pat on the back, because you definitely deserve it. Yes. Anyway, going forward, we have closing stock. Closing stock has nothing to do with any other income statement, so I'm leaving it. Gross profits is the balancing figure, so it does not matter. Dividends from domestic companies is 15,000 rupees. Now, if I'm noticing the question, it starts from net profit, which means we're going to do indirect method. So what I'll be doing is I'll be starting from net profit. I will be removing this dividend from PGBP and I will be adding it to IFOS. Yes, by dividends from domestic companies is given. Next, by winnings from lotteries, net of TDS, TDS is 4,500, 10,500 is given to you. It has never happened in the past in exams where ICA has told you what the TDS amount is, because they expect you to know those provisions as well. But luckily this time ICA is coming and saying, you know what, I don't even want to take you to efforts. I am giving you everything which you need for your exams to clear. Go ahead and take it off. Yes, so they have come and told you that TDS is also 4,500, the net profit is 10,500. Now you have done this question multiple times in classes also. Please understand that in the PGBP P&L there is only 10,500 rupees given, so I am going to remove 10,500 from my PGBP statement. But at the same time, please do understand that the number which is given in the PGBP is only the amount received. Yes, what you need to tax is the whole gross income, and the whole gross income will be including the TDS component, which means in IFOS, you're going to add this whole number, which means 15,000 is what is going to be added in the IFOS statement. Yes, so you'll remove 10,500 from the PGBP and you will add 15,000 from IFOS. A fairly simple, straightforward adjustment, people. We have done this multiple times. I'm sure you would have done it properly. Yeah. Next, by profit on sale of shares, 45,000. Now, profit on sale of shares is given, which means I need to remove it from PGBP for sure because it is not your business income. But at the same time, I need to add it to my capital gains. The only challenge with capital gains is I don't know whether it is long term, short term. What is it, 112A, 112? Because the question is asking for tax rate also. As of now, I don't know the answer, so I'm going to leave it as it is. As we read the additional information, probably we'll have more clarity on this. Yes, look at the next slide. It says administrative charges is 2,90,000. I have no problem with administrative charges. It looks for business. SGST penalty paid, it is not compensatory in nature. Our penalty kudutale, we could have left it as it is, but they itself coming and clarifying that it is not compensatory itself means that it is not allowed as a deduction. So you will add it to your PGBP statement. Simple, straightforward disallowance because it is not compensatory in nature. It's an offense payment. GST is paid 1,10,000. Now, GST is already mentioned as paid. It is not even accrued, it is paid, which means I don't have any adjustments to do with this. I can ignore this adjustment. Next. General expenses is 55,000, so therefore no adjustments. Miscellaneous expenses is 1,55,000, no adjustments. Loss on sale of shares is 20,000. Again, when you have a profit on sale of shares, loss on sale of shares has the same logic, which means here I'm going to add it to my PGBP because it is claimed as a deduction, and I'm going to remove it from my capital gains. Now, the issue which I have again is that I don't know whether this capital gains is long term or short term. Somehow something will go wrong. So I'm going to wait and I'm going to decide before I make a cross adjustment. Do not hurry and make a cross adjustment because if the provisions are differently worded, you may have a problem. So please be patient and let's look at the additional information before we go forward. By interest on loan on machinery, term loan is 60,000 given to you. So it's a loan taken for your office purposes. Therefore, there is no problem. But the problem is interest to bank is given on machinery term loan. The question now comes up is, Rahul, is the machinery put to use or not put to use? If they say that the machinery is put to use, then the adjustment is right. You don't have to do anything with it. But if it's not put to use, your borrowing cost standard comes into picture, which means you will have to capitalize this. And if you have to capitalize this, you will have to disallow it. We will wait and watch on what happens. Next. The depreciation is 2 lakh rupees. Now, since somewhere in the bottom I noticed that they were telling me not to do additional depreciation, I'm assuming that they will come and tell me how to do depreciation also, which means I am going to tell that this is a book depreciation and therefore I'm going to disallow it under PGBP. Net profit becomes my starting point. Yes, so already without even going into my additional information, this is the following adjustments which I'll be making in my PGBP statement. So I have to start from net profit and I have to make all these adjustments. If you have done these much, great job. Next, looking at the additional information, following are the additional information given to you for financial year 23-24. The administrative charges which I originally told is allowable as a deduction now includes a 46,000 which is paid as commission to the brother of assessee. Commission is at a market rate of 36,000. I have made a payment to my related party, which is my brother, and I have not made the payment as per market standards. I have made payments more than the market standards. Income tax says, I'm sorry, you cannot make payments more than your market standards. That is not correct too, because it is a tax evasion strategy, and therefore they come and say the 10,000 is going to get disallowed. The 10,000 being the excess payment. The 10,000 being the excess payment is now going to get disallowed. Yes, great. The assessee has paid 33,000 in cash to a transport carrier on 26 December 2023. The amount is included in manufacturing expenses, assuming that the provisions relating to TDS are not applicable on this payment. So they are coming and saying there is a payment which you are going to make it to a transport operator and there is no provisions of TDS applying, but the payment which you have made is made by cash. Now, if you recall, provisions come and say that as per section 40A3, payments of more than 10,000 should be done by permissible modes. But when it comes to a transport operator, you can make a payment up to 35,000 per day. Since the payment is made only of 33,000, the payment is allowed as a reduction, which means I don't have to do anything. I will simply ignore the facts. Yes. Now, Rahul, if you have gone ahead and you have ignored this facts and the information in the exams without even writing a note against it, please expect a loss of mark. Yes, I've always told this multiple times in the classes also. You have to write notes even if you're ignoring an information. If you've done that, you will get that 1 mark. If not, I'm sorry, you're losing marks here. Do not make that mistake. Great. Next, a sum of 4,000 per month was paid as salary to staff throughout this year, and this has not been recorded in books of accounts. Hey, somehow if I'm noticing this, no, this looks like your study material question. Yes, it looks like exactly the same study material question which is there in your PGBP chapter. Doesn't look like anything different. The same 20 questions have come. Here is where ICI in the study material has given 2 options. Option number 1, they come and say it's a genuine mistake, so therefore claim it as deduction. No problem, because you have missed it out, so you can claim it as a deduction because it is incurred for business. Option number 2, they come and say, I'm sorry, you have to treat this as unexplained expenditure because you have not reported it in your books. So probably it's because you don't have the source explainable, and therefore income tax ICA would come and say in this case you will not claim this reduction definitely. First of all, this 4,000 will not be claimed as reduction. Second of all, you will add this number additionally into your PGBP statement and say this is an unexplained income which is going to be taxed at 60 plus 25 plus 4% ka cess. Yes, this is what would happen. Ideally, you would have to take it in those terms. Now, Rahul, what would you prefer to do in exams? Honestly, if you ask me, I would prefer to do option number 1. The reason is very simple. In this question, they're also asking for tax liability. Now, the study material question did not have a tax liability involved to it, so therefore they left it there it is. But here, when you have a tax liability coming into picture, having a suo motu disallowance made of suo motu income offered of 4,000 into 12, 48,000, and apart from that, doing a 78% tax on this looks like very wrong. Definitely looks very wrong. You will have to make weird assumptions around it. I would not prefer a person voluntarily going and doing a 78% tax, because we have discussed this in the class as well. When it comes to unexplained income, it is an assessing officer who can levy a 78% tax. You are not supposed to voluntarily suo motu come and say, yes, take 78% out of me. In that case, just to be safer, I would prefer you to do option number 1. Let's wait for suggested answers and see what the answer would be according to them. But nevertheless, if you have done either of the two options, you will get full marks, because this is an proven ICI study material question. Next, the bank loan term interest actually paid up to 31st March was 20,000 and the balance was paid in October 2024. So now they have come and told Rahul, forget the fact that it's machinery term loan. The fact is that the interest which you have taken, no, that interest also you have not paid before the due dates properly. Yes, what has happened is on 31st March 2024, you paid 20,000 rupees. 31st March 2024, you paid 20,000 rupees. I'm looking at the interest is 60,000 rupees. So 20,000 has been paid before the end of the previous year itself. And the balance item has been paid on October 2024. Now, the facts of 43B come and say that if you are going to have an expense payment, the expense payment should be made before the due date of return filing. It's not before the 31st March of the previous year, it is before the due date of return filing. And in this case, if you are not going to opt for presumptive, you are going to be liable for tax audit. And if you are going to be liable for tax audit, your due date is only 31st October 24. The person is ending up making the payment before October 2024, which means I have no restrictions here. The payment is fully allowed as a deduction. The whole expenditure can be claimed as a deduction. Everything looks fine to me. Everything looks fine to me. You have no problems in this whole adjustment. You can ignore the information provided you have given a note against it. Great. Next, miscellaneous expenses include 10,000 contributed to Prime Minister Relief Fund. So you have a miscellaneous expenses given. In that miscellaneous expenses, they are saying that we have made some donations. Yes. Now, if you ask me, what I will do is I will disallow this under PGBP and next move to Chapter 6A. One thing which I remember from the question itself is that the person is opting out of default regime, which means it is an Chapter 6A adjustment which you can give. It's a Chapter 6A adjustment which you can give. The only problem in this question is it says Prime Minister Relief Fund. Now, we have discussed in the class as well, when it comes to Prime Minister funds, there are two kinds of funds. One is called as Prime Minister National Relief Fund, one is called as Prime Minister Drought Relief Fund. Yes. Now, the fact of this question is the question does not even come and say which relief fund are they talking about. They just simply say Prime Minister Relief Fund, which means here is where you have to now make an assumption whether you talk about national or you talk about drought relief fund. Now, in all practical sense, I've come and told you that category A is the garbage of the whole ATG, and therefore I would come and make an assumption that the deduction is a category A deduction, which means you simply have to take it and you have to allow 100% of the same. You have to simply take it and allow 100% of the same. That is what I would personally come and do for this adjustment. Yes. Next, loss on sale of shares represents shares which are sold within 6 months from the date of purchase. So they are coming and saying that Rahul, the shares which you had made a loss on, that loss on sale of shares is actually coming from a 6 months purchase share. Now, 6 months purchase share itself means that the shares which you have sold, it does not have to matter whether it is long term or short, whether it is listed or unlisted, the shares will end up becoming a short term capital loss. The shares will end up becoming a short term capital loss. This is what the adjustment will be. Now, this is a good news for you. The moment an asset is a short term capital gains or a short term capital loss, it can be adjusted against any capital gains. So at this stage, I absolutely do not care whether the 45,000 is long term or short term. If you ask me, I don't care, because even if the asset is long term, it is still allowed as an set off, and if it is short term, then also it is allowed as a set off. So at this stage, I will come and make a choice that yes, Rahul, when you are going to add it to your capital gains, 45,000 में से 20,000 has to be reduced. 45,000 में से 20,000 has to be reduced, and therefore the net 25,000 is what you're going to offer as capital gains tax. Now, to understand whether it is long term or short term, we'll have to read the additional information, but right now this is what the facts would be. Next, the question comes and says that the profit on sale of shares represents shares which are held for 2 years and securities transaction tax was paid on it. You now have a share on which you have paid securities transaction tax, which simply means that the shares is listed. The moment the shares are listed, you have now a long-term capital gains coming into picture. So which means this gains is a long-term capital gains. And the thing is, because it is a long-term capital gains on which you have paid securities transaction tax as well, this now becomes a 112A ka income. This now becomes a 112A ka income. The moment it is a 112A's income, it means that you are now going to be liable for an exemption, deduction up to 1 lakh rupees on the income. You're going to be liable for an deduction of 1 lakh rupees worth of income, and therefore what you're going to do is you're going to take the LTCG, 45,000 of LTCG, 20,000 worth of loss you're going to remove out of it, leaving you with a balance 25,000 worth of long-term capital gains. You will put it in your income statement and ignore it. You will put yes. So what I'm going to do is I'm going to take this 6 and I'm going to call it as a short-term capital loss. I'm going to take this 7 and I'm going to call it as a long-term capital gains. The short-term capital loss is going to get adjusted against the long-term capital gains, leaving me with a 25,000 worth of long-term capital gains, on which I have to do nothing but just to take it as an ignoring item, because I will not be liable for tax on this item. This is what I would be probably doing as a straightforward logic. Yes. Next, housing loan repaid during the year is 50,000 rupees and it is relates to a residential property which is occupied by him. The interest on loan on this property is given as 2,60,000. Okay. Housing loan was taken from a Canara Bank. Value of the property is 45 lakhs. Loan value is 25 lakhs. Sanction date is 31st March 2017. Amounts were not dealt in the profit and loss account. Okay, great. So none of the amounts are dealt in the profit and loss account. Now they are coming and telling me that I have a property. In this property, I have currently paid a housing loan repayment of 50,000, which itself becomes an 80C. Next, it relates to a residential property acquired by him, which means it is an SOP property. Next, interest on housing loan is taken as 2 lakh rupees. Now, because it is an SOP property and all conditions are being satisfied, I will take the 2 lakh rupee, 2 lakh 60, and I will take 2 lakh rupees as a deduction under HP chapter. Yes, this is the first thing which I'm going to do. I'm going to claim a deduction of 2 lakh rupees under the HP chapter. Next, balance 60,000 rupees. The question is coming and saying housing loan was taken from Canara Bank. Value of the property is 45. Loan value is 25. Sanction date is 31st March 2017. Now something looks weird here. I don't know what is happening. Normally speaking, if ICAI would have left the question till here, no, people would have lost marks here. Yes, but for some reason, again, ICAI wanted to make the paper so simple that they have itself come and told you what to do. Read the last line. The last line comes and says, assuming this housing loan is liable for deduction under 80EE. Yes. Now here is where the comedy is. Normally in the classes when I was speaking to you, I told you that Rahul, when it comes to chapter 6A, there are two sections called 80EE and EE. EE is not very important for exam because it is of 1617, a very old thing. So therefore ICAI will normally not test you. Now here is where ICAI with a twist has tested that only. But before you start cursing Rahul to come and say that Rahul, you told me not to study, so therefore I did not study. When ICAI itself is coming and telling you what section it is, and why the you come and question me. Yes, you cannot have a choice to come and question me because ICAI itself is coming and telling you what you need to do with that adjustment. Even if you don't know that adjustment also, ICAI is now coming and telling you what adjustment to be done. Beyond this, I don't know how ICAI can support you. Yes, because ICAI knows that it's a very old section and they should genuinely not test you. Somehow they wanted to test you and therefore they have given the section itself to come and clarify what you need to do. Which means what you need to do is you simply need to take this balance 60,000 which you have. Out of the 60,000, 80EE only grants a reduction of 50,000 rupees. So you will get the deduction of 50,000 under 80EE. This is what the additional deduction will be. Rahul, what happened to the balance 10,000? Nothing will happen. It's an ignored information. Yes. So in this section, there are three deductions to be granted. One is 80C of 50,000 rupees. One is an housing loan repayment of housing loan interest of 2 lakh rupees, which is to be claimed under HP chapter. You will get a loss from an SOP and you will adjust it against your PGBP income. You'll adjust it against your PGBP income. Apart from that, you now have an 80EE of 50,000 rupees. This is what the three deductions which you have to claim. Yes. Next, Depreciation which is to be allowed under the income tax are given to you as under. They are itself coming and telling that the plant and machinery is depreciation at the rate of 15%. Ideally, yes, this table is also something which is there from study material only. Yes, so same study material question has just come up to you. Opening WD is given as 12 lakhs, so which means on this you will multiply 15%. On the additions during the year used for more than 180 days, you will get again another 15%. Please do not make the mistake of claiming additional depreciation. When ICA itself has told you not to claim additional depreciation, you are not supposed to do it. You are not supposed to do it. Do not make that mistake. Yes, so you have to give only 15% and leave it there. Then the question says total additions during the year. Now the fun about total additions is that when they say total additions and then additions during the year, it means this 2 lakhs is already a part of 4 lakhs, which means you will now take the balance 2 lakhs and you will come and say, sir, the 2 lakhs balance is there, is being used for less than 180 days and therefore it is eligible for 7.5 worth of depreciation. Yes, 7.5 worth of depreciation, and your question is over. Yes, a fairly simple, straightforward question. If you ask me, Rahul, how much marks is this? 15 mark question, is it? Yeah, 15 mark question. I don't know how it is worth 15 marks because none of the adjustments are so tricky enough. In fact, on that part, they have not even asked you a lengthy question. It's a fairly simple, straightforward question which you do not even have to spend time on. Yes, you could have actually taken up this first compulsory question itself and still completed the paper on time. Yes, that is the kind of paper it is. Very unlengthy paper. Simple, straightforward, moderate paper which you could have easily cleared. In this, in fact, if you come and ask me, most of the adjustments are study material related adjustments only. Some 3-4 extra adjustments they've asked you. If you ignore the 3-4 adjustments also, you can out of 15 marks score at least 9 to 10 marks. Bare minimum 9 to 10 marks you could have scored from a compulsory question. A fairly simple, straightforward adjustment questions. I do not see any worth of this question. You could have easily scored it well. Yes, if you have done it well, then great job for you. Please do bear in mind that you have to compute the taxes, so please do ensure that you have completed the taxes. How you would have computed the taxes? I think the one I see two special incomes in this. One is your winnings. Winnings will be taxable at the rate of 30% plus an additional cess. If you have taken the salary as an unexplained income, then that also will be liable for 78%. Ideally, you should have not done that. And finally, if you are going to have LTCG, which is 25,000, the 25,000 will not be eligible for any taxes because up to 1 lakh you can claim an exemption. You can claim an exemption. Apart from that, there is no special income, so therefore everything else will be simple, straightforward. You can just simply take it and close it off. Yes, great. With this, we are done with the compulsory question. You're almost done with 15 plus another 15. 30 marks is already done from your syllabus. Out of 50 marks paper, 13 marks, simple, straightforward. Yes. Anyway, let's look at what the balance is and let's see how complicated those were. It says, Mr. Tilak is age 35 years, furnishing the following information regarding his income for the assessment day 24-25. Compute the total income if the person is an R and O. The person is ROR. Oh wow. I've never seen us. I say come in asking ROR kind of questions. They'll always come and ask you NOR, NR and R and OR. Somehow they're asking ROR questions also. Okay. NOR. Oh wow. So therefore ICA does not even want to know what is happening in NR cases. They want to know what is ROR and RNOR. Normally ROR everything is going to be taxable. But anyway, let's see. What I'll do is I'll probably create an two columns. One I'll call as ROR and one I'll call as RNOR. If it is taxable, I'll write tick. If not, I'll make it as a cross. It says remuneration of 50,000 for services rendered in Malaysia, credited to his bank account in Malaysia, immediately remitted to his bank account in India. I don't have to care. ROR is fully taxable. Yes, which means if it's a 6-mark question, oh wow, it's a 6-mark question. Oh god. It's a 6-mark question. 3 marks is for ROR and 3 marks is for RNOR. If you write everything ROR as taxable also, you get full 3 marks. Okay, maybe there will be some adjustments, but yeah, as of now, at least to start with, nevertheless. Let's look at RNOR. RNOR, it says remuneration of 50,000 for services rendered in Malaysia. So services are happening outside India. Credited to his bank account in Malaysia, which means income is also credited outside India. Immediately transferred to his bank account in India does not matter. Does not matter because money has on the first instance been received outside India and accrued outside India. It will be not taxable for an RNOR. Next, profit from a business in England controlled from Bombay 3 lakhs, out of which 25,000 is received in India. If it's an ROR, everything is taxable, so the whole 3 lakhs is going to be taxable. If it's RNOR, understand this very carefully. When it comes to RNOR, there are 5 incomes which are taxable. The 5th income being any kind of money received from a business controlled from India is fully taxable. So when it comes to RNOR, also full 3 lakhs is taxable. Full 3 lakhs is taxable. Next. Amount brought to India out of the past untaxed profit earned in Singapore 1 lakhs. Maybe this is why they asked ROR also. This is not taxable for ROR. Please understand it's past profits remitted to India. Remittance is never taxable under Income Tax Act. So when it's ROR or RNOR, it does not matter. Both are not taxable. Both are not taxable. It's a simple, straightforward provision. But yes, 6 marks. Oh, there are more. I'm sorry. Okay, capital gains on sale of land in India but received in Malaysia. If the capital gains is on sale of land in India, the income is accrued or arised in India. Therefore, it is taxable for both ROR and RNOR. Next, income from agricultural land at Nepal, 18,000 received there, then brought into India. Agriculture is happening in Nepal, which means it is not exempt in India. It is agriculture income from Nepal received there. So income is accruing there, income is received there. Income is not taxable for RNOR. Income is continuing to be taxable for ROR. He paid 50,000 towards principal repayment of loan taken for construction of self-occupied property in India. 50,000 of repayment. This is not an income. This is ATC. This is ATC to be claimed as a reduction under ATC. Next, interest on savings deposit in State Bank of India. The person is State Bank of India. Is the age given anywhere? Yeah, age is 35 years. So you will take a State Bank of India. What is going to happen, Rahul? You're going to tax this full 12,000 for ROR also, 12,000 for RNOR also. But because the savings is from interest of State Bank of India, you will also get a deduction of 10,000 under 80 TTA for both the people. For both the people, 80 TTA comes and says any kind of interest on savings deposits will be allowed as an deduction up to a maximum of 10,000 rupees. So therefore 10,000 ka deduction also you will grant. 10,000 ka reduction also you will grant. 6-mark question. I don't know what 6 marks is coming from here. Simple, straightforward thing. You can easily score 6 marks in this. Anyway, point number B comes to TDS and TCS. Normally people will not attend this. No, probably why? Point number A they gave so easy because they thought people will get greedy and they'll come to this so that they lose 4 marks here. Let's see whether you lose this 4 marks or you'll get this also. It says examine the applicability of TDS or TCS as per the income tax provisions. ABC Limited has paid a rent of 75,000 plus 18% GST per month to Mr. Ram for the office premises on 1st April 23 to 31st March 24. Ram is furnishing the PAN number and also is filing his return before the due date regularly. So the payer is a company giving a rent to Mr. Ram. The moment the payer is a company, the deductor is the company, and if the deductor is the company, hijacker provisions will not apply, which means 194I will come into picture. 194I will come into picture. Now 194I comes and says that you have to make a payment of 2,40,000 for the year. The person is making 75,000. The person is making 75,000, which means TDS will apply. TDS will apply. You will have a TDS at the rate of 10%. Yes. Now the whole trick about this question is, Rahul, 10% will happen on what? Will 10% happen on 75,000 plus 18% GST, or will it happen only on 75,000? The answer is only on 75,000. You will not have it more than 75,000. This is what the number will be. Yes, you will have to take the TDS only on the 75,000 component. There is a clarification explicitly from income tax which comes and says TDS will never apply on the GST components. TCS will apply on the GST components also. Yes, so for TDS purposes, you will only take the GST, the base value and not the GST component. Yeah, next. XYZ Private Limited sells 2 cars to Mrs. Anju costing 4 lakhs and 12 lakhs respectively on 1st May 23 and 25 December 23. Mrs. Anju has furnished her PAN number and filed a return of income regularly before the due date. You will ask me, Rahul, person who is buying the property is Anju. So Anju should be getting the PAN number from the company, right? Why is Anju giving the PAN number to him? Because this is not a TDS provision. This is a TCS provision. This is 206C. This is 206. See, you are looking at TCS provisions. The TCS provisions come and say that when you are going to buy a car more than 10 lakh rupees, you have to pay a TCS to the person from whom you are buying the car. Yes. Now, the 10 lakh rupees is per vehicle, and therefore the 4 lakh vehicle is not liable for any TCS. The 12 lakh rupees vehicle is liable for TCS at the rate of 1%. At the rate of 1%. So 1% ka TCS will apply on the 12 lakhs ka vehicle. Yes, this is what the provision is. This is a TCS ka provision. Yes, unfortunately, this time also they have not tested the amendment relating to the LRS scheme. I would have expected that LRS amendment would have come and that would have been more fancier to test. But maybe they are expecting out of this in September or Jan exams. They have not tested it in this exams. Yes, I would say normally people would not read TCS and all and go. So therefore they would have lost this 2 marks here. People would normally not be aware about the fact that they should do GST for TDS and non-TDS. So maybe first one also, I'm assuming people would have not attempted it. So fairly, yes, if you ask me as an honest student, I would come and say I would have attempted A properly. I would have left off the whole B, which means 6 marks I would have scored, 4 marks I would have not scored. Yes, that is what I would have done as a normal human being. I do agree with you. I would not question that. I would not question that. Let's see if you should have attempted question number 2, or you could have done 3 and 4 and still scored the balance 4 marks also. That is what we'll do in the next follow-up questions. But yes, this is what your question number 2 is. A simple, straightforward question. I don't see, if as long as you don't spend time thinking about it, you should have easily able to score this paper, this 10 marks even before the time. You wouldn't even need the whole 15 minutes for you to write this whole this 10 marker question. You could have done it in 6 to 7 minutes also. You could have saved a lot of time for your other questions, but nevertheless, yes, this is what you should have done, ideally assuming you have not thought about it too much. If you have thought through too much, then you would have lost some marks there. That is what I would say. Let's move on to question number 3. Oh, question number 3 has A with subdivision 1 also. Okay, let's see. It says, Mr. Ravi received an advance of 2 lakh rupees on 10th May 2023 from a closely held manufacturing company, a private company in which public are not substantially interested. Okay, there is a person who's receiving an advance of 2 lakhs from a private company in which he holds 22% shareholding. The company has an accumulated profit of 1 lakh at the time of giving the advance. You're required to compute the income which is to be included in the hands of Ravi for the assessment day 24-25 and also state the head under which this is to be included. This is your standard theory type of question, which is from the chapter of dividends. This is from the chapter of dividends. You have this concept called as section 222E. You have this concept called as section 222E, which comes and says that when you are a shareholder holding more than 10% holding in a private limited company, any loans or advances which you get from the company will be deemed to be as a deemed dividend in your hands to the extent of the accumulated profits of the company. Let's see if all the facts are satisfied. You are an individual getting a holding more than 10% from a private limited company. The amount received is 2 lakh rupees as an advance, and the company has an accumulated profit of 1 lakh rupees. All conditions getting satisfied. So therefore, what will happen is you will be taxable only to the extent of 1 lakh rupees under the head IFOS, and this will be taxable for Mr. Ravi. This will be taxable for Mr. Ravi. This is what the answer would be. Yes, this is what the simple straightforward answer would be. Now, ideally speaking, in this, yes, it's a 2-mark question. So Rahul, if you write just this 3-line items, will you get marks? No. You will have to write the provision, then explain the facts. Also come and clarify that even though he received an advance of 2 lakh rupees, he'll be taxable only for 1 lakh rupee because that is the only accumulated profits which the company has. If you've written all the 3 items, then only you'll get marks against it. Otherwise, I'm sorry, you're not getting marks against it. Yes, but a simple straightforward question, you would have got it from IFOS. Next, Mr. Rao has furnished the following information regarding his payments made to scientific researcher. Hey, what to ask in scientific research? PGVP scientific research is simple, straightforward. Everything is allowed as reduction except for the land. Yes, that is what the adjustment is. Is there a question about... The question is not even asking for oh God. The question is not even asking for default regime. They're asking alternate regime and they want you to do scientific research. Hey, what do you want me to answer in this? I'm going to say everything is allowed as reduction except for land. That's all. Anyway, let's look at the question. It says, the payment is of revenue expenditure on scientific research incurred during their 100% allowed. Capital expenditure for scientific research 100% allowed. Contribution to notified approved research association 100% allowed. Amount is paid to H Limited, an Indian company which has its main objects scientific research and approved by prescribed authority, 100% allowed. Expenditure of 2,50,000 towards purchase of land, not allowed. He has also incurred revenue expenditure of 2 lakhs towards salary of research staff before commencement of business, and this is certified by prescribed authority. When it's certified, who are you to come and ask? Therefore, 100% allowed. A 4-mark question this is it? Oh wow. Okay. 3 plus 1, 4 plus 1, 5 lakh 50, 6 lakhs, 8 lakhs and 10 lakhs. That is what your deduction is. 10 lakhs is your deduction. 4 marks in your hand. Great. Okay. I'm saying question number 3 is pakka to answer. There is no doubt about it. You're easily getting 6 marks. For this and all, if you're getting 6 marks, this is a 1-minute answer. You just have to write the numbers. That's all. Oh wow. Anyway, question number B, it says, Mr. Surinder is furnishing the following particulars for the year ended 31st March 2024. He has told that he has a residential house inherited from his father in December 2009. Okay, so there is a person who has taken a property from his father in 2009. The fair market value of the property is 13 lakh rupees. So you know the cost of acquisition. The cost of acquisition is 13 lakh rupees. Please do bear in mind that the cost of acquisition is 13 lakh rupees of 2001, which means the property has been held for more than 24 months, which means the asset is a long-term capital asset. You will have to do indexation on this also. Because it is an inheritance, the cost of acquisition of the new owner, which is Surinder, will be cost of acquisition of father. The period of holding of new owner, which is Surinder, will also be from the period of holding of father, which means he has to take the period of holding right from 2001. In the year 2013-14, further construction and improvements costing 10 lakhs was also made. This is your cost of improvement. Again, because asset is a long-term capital asset, you will have to give indexed cost of improvement. The house was originally purchased by his father on 1st March 2000 for 10 lakh rupees. Okay, great. I'm still right, because technically the 13 lakhs is not the cost of acquisition, it's a fair market value. But luckily, because the purchase happened at 10 lakh rupees and it has happened before 2001, you can take the actual cost of fair market value on 2001, whichever is higher. Because my fair market value is 13 lakh rupees, my cost of acquisition remains at 13 lakh rupees. I don't have to take this information. On 10th May 23, the house was sold for 75 lakhs. The expenditure incurred for the transfer is 50,000. So which means your full value of consideration is given to you. 75 lakhs में से 50,000 गया तो 74 lakh 50,000 is your full value of net consideration. This is going to be your net consideration. I am making an assumption at this point of time that the stamp duty value is lesser than this full value of consideration because nothing is given in the question. In case they give it later on, I'll change the answer. Yes, but right now this is what the facts would be. On 20th December 2023, he purchased a residential house for 12 lakh rupees and he does not own any other house. The person is selling a house and is buying another house, which means you'll get an exemption of section 54. You can claim an exemption up to 20 lakh rupees from this deduction. Compute the taxable capital. Hey, what is this? Compute the taxable capital gains of Mr. Surendra is given to you. That's all. They have not even given one stamp duty value also. Hey, question number 3 is pakka to solve. There is no doubt about it. You are easily getting 4 marks here also. Yes, you have to take the net consideration. You have to do index cost of acquisition and index cost of improvement. Now, Rahul, the only thing which I have to bear in mind is that when you are doing index cost of improvement and index cost of acquisition will be 13 lakhs into 348 divided by not 100. It is going to be divided by 220, I am assuming. No, 148. Yeah, 148 is the date on which the transfer happened. Yes. So it is going to be 348 divided by 148, unless and until you have opted for Manjulasha. If you have opted for Manjulasha, then what you have done is right. You could have taken 100 also. But if you have opted for Manjulasha, you should have given a note against it. If you have given a note against it, then the answer would be right if you take 348 by 100. If you have not opted for Manjulasha, but rather directly done 348 by 100 without mentioning the case law, you may lose marks there. Depends on how ICI looks at it. Honestly speaking, if the paper is so easy, then correction is going to be difficult only. And if the correction is going to be difficult, ICI is going to be expecting those things out of you. If you've written Manjulasha and then done that, then you're getting full marks. But if you have not done that, I'm sorry, you will lose marks against it. Index cost of improvement is going to be simple, straightforward. You have to just take 10 lakhs into 348 divided by 220. That's all. Yes. So question number 3 is 100% to solve, people. No doubts about it. Yes. 2 or 4 is now the challenge. 2 or 4 is now the challenge. Let's see what happens. I'm looking at question number 4. It says Mr. Joshi is a resident Indian aged about 58 years, furnishing the following details of particulars of incomes to you for the year 23-24. They have told that the income from property computed is 2 lakhs. Anyway, before I do that, let me also look at the question. Let me see what the question is asking. It says compute the total income of Mr. Joshi for the assessment day 24-25 and show the items which are eligible to be carried forward, assuming that he exercises the option of shifting out of default regime. Hey, we are in the last question. They've still not asked any default regime question, is it? They've still not asked any default regime question, which means you do not have any default regime questions except for one MCQ question which they asked. That also was an optional thing. Yes, but apart from that, I think looks like this time in May exam, they have not even tested on the default regime. Everything has come from alternate tax regime. Simple, straightforward paper. Okay. Income from house property, this is your income, so therefore it is going to be taxable. Income from proprietary business is your PGBP income, therefore taxable. Short-term capital gains on sale of land is your short-term capital gains others, therefore it is going to be taxable at slab rates. Short-term capital loss on equity shares listed in recognized stock exchange 75,000. This is your 1118 loss. Now the thing is, when you have a short-term capital loss, you can adjust it against your long-term capital, short-term capital gains. So therefore, cross adjustment is going to be happening. 75,000 is going to be ignored and will be adjusted against the 2 lakh rupees. Interest on bank fixed deposit is 50,000 rupees received by his son, aged 21 years, out of the money gifted by Mr. Joshi. So Mr. Joshi is giving money to his son. Okay. That too in 2022, and the interest on this money has come to you. Now, the income may look questionable to you. You may come and ask, Rahul, what to do with this? Should clubbing and all apply? The answer is no. There will be no clubbing of income in this, because please understand, the son is a major son. The son is a major son. There is no clubbing happening. Clubbings can only happen in case of wife, son's wife, or it can happen in case of spouse. It can happen in case of son's wife, or it can happen in case of minor child. Since the money itself is given in 2022, that time also the child was major only. So this income is to be completely ignored. You don't even have to look into this income. This income is completely ignored because it is going to be taxable in the hands of son. That's all. Loss from speculation business, 40,000 rupees. Now, because it's a loss from speculation business, it can only be adjusted against speculative income. I am not seeing any speculative income, which means this income is going to be carried forward. Period is 4 years. Loss from owning and maintaining of horse races, 50,000 rupees. This is again a loss. I don't see any corresponding income, which means this is also getting carry forward for a period of 4 years. Following are the brought forward losses. Now, that's all is the incomes. Let's look at the brought forward losses. It says brought forward loss of assessment year 21-22 is 2,50,000. I have a house property income of 2 lakhs. I am going to adjust this 2 lakh against 2,50,000 against 2 lakhs, leaving me with an income of 50,000 balance. Leaving with the loss of 50,000 balance. So this loss is now going to be carried forward. Yes, Rahul, how many years of carry forward? This is of assessment at 21-22. So 22, 23, 23, 24, 24, 25, 3 years are already exhausted, which means it is going to be carried forward for another 5 years. Yes, so which means this income is also now not taxable. Sorry. So HP is also now not taxable. Next, brought forward business loss of proprietary business from 13-14. Oh wow, 13-14 is it? So okay, 14-15, 15-16, 16-17, 17-18, 18-19, 19-20, 20-21, 21-22. 13-14 order loss is not even eligible because 8 years is already lapsed, so I'm going to ignore this information. I will say it is lapsed after 8 years, so therefore information to be ignored, not allowed as a deduction. Next, unabsorbed depreciation relating to 14-15, 1 lakh rupees. Yes, unabsorbed depreciation can definitely be claimed. Unabsorbed depreciation can definitely be claimed. Now the question then comes up is, Rahul, against what are you going to claim? I have only 2 incomes with me. One is proprietary and one is short-term capital gain. So you can adjust it against either of the two because both are taxable at slabs. So you can adjust it against proprietary business also. You can deduct it against your short-term capital gains on sale of land also. It does not matter. I would say either way does not matter. Next, brought forward long-term capital loss from assessment year 18-19. Return of income for that year was filed on 31st January 2019 after due date of return filing. When they are itself coming and saying it is after due date of return filing, the loss cannot be carried forward. The loss will be exhausted here itself. You could not even carry forward. This information itself is not relevant. Yes, this is what the answer would be into this question. Compute the total income of Josh and also give the losses to be carried forward. So I have income of 3 lakhs, 1,25,000 of short term minus 1 lakh, so 25,000. 3,25,000 is what his income is going to be. His income is going to be 3,25,000. The speculation business will be carried forward. Owning and maintenance will be carried forward. HP loss will be carried forward. This is what your answer would be. That's all. Yes, this is your 4-marker question. Now, yes, in this question, maximum you could have made a mistake is on 2 items. One item is on your proprietary business and the other item is your interest on fixed deposit. Yes, these are the only 2 mistakes which you could have made. If you have made the interest on fixed deposit as a mistake, you probably would have added it in your income statement and then would have given a deduction. Yes, that is the maximum thing which you could have done. If you have done that of 80 DTA deduction and all, yes, there is where you could have lost 1 or 2 marks max to max, but otherwise fairly simple, straightforward question. You should have definitely tried this. So question number 4A, check. You should have tried 4A. I am comparing 2A and 4A. Looks like 2A is easier, but let's see 4B and then make a decision. Yeah. So 4B has 2 options. First one comes and says state with reasons whether the following persons are required to file the return of income. Oh, theory question. Okay. Mr. Anis is age 31 years who has opted for default tax regime under section 115 BAC. Who has opted for default tax regime under section 115 BAC 1A and has total income of 2,90,000 for the previous year 23-24. Hey, something is wrong. By the way, not that it is relevant. This is something definitely which ICAI has to clarify. Please understand 115 BAC 1A is not talking about opting into default regime. It talks about opting out of default regime. Somehow there is an English mistake here. It was supposed to be opted out of default regime, but somehow they have said opted for default regime. Now I'm not sure which one to assume. For the people who do not know section numbers properly, you would have told it is alternate regime. I'm sorry, you would have told it is 115 BAC regime. For the persons who know section numbers properly, you could have made a mess up here. I would honestly say let's ignore the section number and let's work with what the English says. If ICAI does give a difference of opinion, then there is a room for debate. There is a room for debate, but right now let's assume that the person is going for default regime. Question says Anis is age 31 years, opted for default regime, has a total income of 2,90,000 for the previous year to 23-24. In a default regime, your maximum basic exemption limit is 3 lakh rupees. Since your income is only 2,90,000 rupees, I would say it is not liable for return filings. If a person is opting out of default regime, your basic exemption would have become 2,50,000, in which case the return filing becomes mandatory. Now here is where the whole challenge is. I don't know what ICAI would make an assumption. Ideally, I would say ICAI should give marks for both the things. Ideally ICAI should give marks for both the things. This is a mistake from ICAI. Next, Srimati Patel, age 65 years, has a TDS credit of 55,000 during the previous year 23-24. Now, this is the circular part of the question. This is the circular part of the question. The circular part of the question comes and says that if you do not have an income being liable for return filings, still, if you have a TDS credit showing more than 50,000 in a senior citizen scenario, then also return filing is mandatory. Since the person has a TDS credit of 55,000, which is more than 50,000, the TDS return filing is mandatory for this person. The gross receipts of Mr. Ajit, age 45 years, an architect for the previous year 23-24 is 12 lakh rupees, but his profit from profession is only 2 lakh 25 and he has no other incomes. Understand, when it comes to profession, income tax comes and says that a person who's earning gross receipts from profession more than 10 lakh rupees is liable for return filing. Yes, it does not matter what your incomes is. It does not matter whether you're liable for tax, or it does not matter whether you have any other conditions to be checked. The moment your gross receipts from profession are more than 10 lakh rupees, you are mandatorily required to file your return of incomes. Yes, this is what the answer would be. This is what the answer would be, and this is what your 4 marks is. This is what your 4 marks is. Now, ideally speaking, yes, I know the plight of students. Most of the students don't read all these provisions and go, and therefore now is where the whole question comes. Do you do 2B or do you do 4B? I guess at the end of the day, I would probably say if you have a risk on 4A and 4B, I would have opted for 2A. I would have opted for 2A and saved my 6 marks, which was clear cut, simple, straightforward thing. But let's look at the option or also. It says CBDT via notification number 37/2022 dated 21 April 2022 inserted rule 12AB notified which are all the persons other than companies or firm who's not required to file return of incomes must file the return of incomes. State who are required to compulsory file a return of income. Okay, so this is where the theoretical question comes. Ideally, this is a thing from the above only. If you notice the points here, no, point number 2 and point number 3, it's a part of the question number B. So question number B is a direct clear-cut theory question. Question number or first or option is where they are given you a case study kind of model. Yes. Now, Rahul, which one do you choose is your choice. If you have really mugged up the provisions and gone for the return filing chapter, then I would have personally said fourth question is better to answer, because in fourth question you could have scored some marks out of the 6, maybe 4 marks into the 4 number A, and the or question you could have answered for the balance theory questions. If it's a 4 mark question, I would have ideally assumed that they would maximum expect you to write some 5 or 6 of those. Yes, where you can write about the payment happening for foreign travels, payment happening for electricity, the deposits made in savings bank, deposit made in current bank, the TDS credit of 50,000 or 10,000. Then you have one more, yeah, gross profits, gross receipts from profession and gross receipts from business. All those things is what the provisions would say. If you remember all those things and you could have written it down, then this is the better question to answer in question number 4. If you think that you don't know that also, then I would have probably assumed that you should have done question number 2A. Yes, 2A is what would have been more fruitful for you, because yes, ideally 6 marks at least you would have easily scored without any doubts. That was the most easiest question to answer, and you could have saved a good amount of efforts and times for you to do your GST as well as your compulsory question. But anyway, that is something which if you have realized at the last heat of the moment, then great for you. If you have not realized it, nevertheless, for all of my friends who are doing this Jan 25 and September 24 and have written this paper, if you had time and you thought through this process, do let me know how you went. For all of my friends who are watching this video and have written the exams or have taken this efforts to go through this test as a test paper, please do write in the comments and let me know whether did you do question number 2 or question number 4. Let's see the majority and let's see how you answer those things. Anyway, that is all that I had. Section number B starts for GST. Now, I do not discuss GST because it does not seem like my forte, but fair overview from my side. I noticed people coming and telling me that GST was also this time very easy. Yes. So overall, if you come and ask me, Rahul, how much can you score from this paper? From a direct tax perspective itself, person who has taken little efforts to study, not even taken extreme efforts, a person who has taken little efforts to study also, out of the 15 marks worth of MCQs, I would have probably come and said you could have scored about 13 to 14 marks. If you have taken your theoretical part, the compulsory question you could have lost some 2-3 marks, maybe you could have lost some 2-3 marks. And then you could have lost 4 marks. Yes, that is all that I would have expected of you. So 4 plus another 3, 7, and plus another 2, 9. Which means out of 50 marks, you could have easily scored 40 marks here itself, which means direct tax itself was sufficient for you to clear your paper. Yes, anything which you get in indirect tax after this is a pure bonus for you to get your exemptions, and who knows, maybe probably a rank also. Yes, so very rank scoring paper is what I would probably come and say. But yes, this also reminds me of a November paper which also came on the same terms, and I realized most of the people did not clear November. The reason was very simple. Sometimes what happens is when ICA gives you extremely easy papers, the idea is very simple. ICA expects clear cut, confident answers out of you. Yes, so the correction itself becomes automatically very tricky. They expect every single small note and small adjustment out of you. If you have written every single adjustment and proper notes with a little bit of legible handwriting and not overwritings, examiners is supposed to give you the exemptions and probably a rank paper also on this. But if you have made some mistakes around this is the right time to come and re-explore those things properly. Yes, this is also a tip for my September 24 and my Jan 25 students. Please understand that this correction would be extremely tough if you have written it on your own. So please, when you do self-evaluate your own papers, look at it as if you're looking as an examiner, and every single thing which is showing in the suggested answers should be there in the paper. If not, feel free to be strict and correct your papers with that kind of confidence. Then come and evaluate how much marks you're scoring out of it. This is what I would probably request out of you. Yes. Anyway, that's all I wanted to tell my friends for today's paper. I don't have anything further to discuss. Again, for all my May 24 students, if you're still watching this video, I know that you have already done your papers. So what is done is already done. Do not focus on it. Take some time, enjoy yourself, give a pat yourself on the back, because you have taken so much efforts for the last 6 months to come to this stage and write this paper, despite all the challenges, despite all that hangama which was going on in the market. It does not matter. At the end of the day, you've written your papers and you will get a good mark if you've really put in your efforts. For all my other friends who are May 24 and are watching this video, somehow after writing all the papers, if you feel like things have not gone well, maybe you could have done a little better in group 1, group 2, both, doesn't matter. And if you have already gone through some reviews of other papers as well, and you still feel like, yes, maybe I could have done something right, or something after looking at all these things looks like I am not at the right track, don't worry. Don't worry. I know you have completed your exams just now, so take a breather, go outside, talk to your friends, reach out to those people whom you have kept hanging for all these months because you had studied so hard and everything. Spend some time with them, get your mood back, lift your spirits. After that, please start immediately. Yes, maybe maximum a week's time. This week, probably next week is what you can enjoy yourself, after which I would request you to start right away. As I record this video, I have already been informed that ICA has launched the timetable for the September attempt as well. And they have also confirmed when the registrations for the next exam will start, which means ICA has come and confirmed to you that on July 7th is when the registrations will open for the September 24 exams. And if the registration dates have been confirmed, there is no doubt but to the fact that ICA will be releasing your results somewhere in the first week of July, or probably in the next week of July. So somewhere between 1st to 15th is where you can expect your results coming in for your Inter 2024 exams. Therefore, it will be a little too late for you people if you leave it right now and you start after July expecting that, yes, probably I will do better. If that is the impression, you may end up losing time and efforts, because after July comes into picture, you will only have 1.5 months for you to write for your prepare for your upcoming attempt, which may not be a fruitful exercise. At this stage, if you have a good amount of 1.5 months left with you, I would really request you all to please once honestly ask yourself how much you have put in efforts for this time, and if you genuinely feel that it might be wrong, it is now a good opportunity to be ahead of everyone else and do prepare for the next coming attempt. If not May, this time September is a really good opportunity for you, because please do understand, all those students who are eligible for November have been pushed to January, which means in this September exams, the only people who will be writing exams are all those people who have attempted May exams and no one else. In Inter, at least to start with, no one who has written for who has earlier attempted for November can be eligible for January, which means the only people who will be writing May attempt is September attempt is only the May students. That is all that will be writing, which means it's going to be a repeaters attempt. And the moment it is a repeaters attempt, ICA has never been very friendly with people. Yes, ICA normally does not keep it very friendly. So I'm expecting September papers to be a little more tricky than what May was. I'm not saying it will be tough, but it will definitely be a little trickier. Yes, so you need to start preparing right away is what my request would be. Take a breather. I'm not telling you to start today itself, forget everything in life and start once again. No, that's not the idea. Take a breather, definitely get well, enjoy and feel proud that yes, you have gone through a scenario right now, and then come back stronger and then start preparing for your exams. That is my only simple request to all of you. Yes, for all of my friends who are already due for November and now got pushed to January, focus on your papers, start completing your syllabus as fast as possible. I know 3 more months have come into your bucket, which is not a good idea, but this 3 months can also be taken as an opportunity to really prepare well for what is coming to your stage. Yes, keep that thought in mind, and so start preparing really well. If you've already completed the paper along with me and your GST paper, probably this is a good paper for you to come and solve yourself, correct yourself, and understand where you stand. Otherwise, always feel free to reach out to me and let me know. I can support you in any way. I will happy to do that for you. That is all that I wanted to tell in this video, people. I will see you all very soon after you clear your papers, and write me a sweet message that you have really done well for this May attempts and you are really going to do well. For all of my friends who are in September and January, I want you to keep this confidence running with you and correct yourself better for whatever is coming to your stage. A very good paper this time is what I would tell you. Same as what November happened, but November came in differently. September, May hopefully should not come in differently. I know it will not, because the efforts which you people have done will definitely show you some fruits in the future. That is all that I wanted to tell from my side, people. See you, take care, have a great learning journey ahead.